I'm here with Francis at NEXA Mortgage. I have a client that's looking to purchase their first home, and they're looking at the rates. The rates are looking at about 6.75 to 7%. A year and a half ago, they were looking at 500, 600 at a lower rate. Now, the rates are higher. Can you tell us the different options that our buyers can look into to help them qualify for their first property at the higher rate?
Yeah, so we have a couple of different options right now. One is the 3-2-1 buy down, where if there are seller concessions, the buyers can use those seller concessions to buy down the rate. So for the first year, it'll be about 2% lower, and then the next year, it'll be 1% lower. After that, they can refinance it once the rates are low, and they can get into the dream house that they want without having to go through all those contingencies and a bidding war. So now they're getting their dream house, and they can get the rate that they want in a couple of years.
So you're saying if we locked in the property and for example, the house is locked in at $500,000, the seller gives them $20,000 concession. We can use that concession to buy down the rate and go into a 3-2-1 buy down.
Correct. You can do that. And the nice thing about it is if you decide to, let's say, refinance the property earlier, if interest rates go down earlier, that amount is put in an escrow account. So you can get a refund from that escrow account and use that money.
Wow, very nice, very nice. My client is locked in at a $500,000 house, and the rate is at 6.25.
Yep, so with the 3-2-1 buy down, the first year it'll be at a 4.25, and then the next year it'll be at a 5.25. So those are really good rates, because a couple of years ago, back in 2018, you were looking at rates in the 5s anyway.
Yeah, that's awesome. And also, the prices are stabilizing right now, and I see that you don't really have to pay too much over the asking price.
Correct. A lot of buyers right now are getting the homes that they want without having to do a bidding war. They're not having to do escalations.
And they get to do an inspection finally.
Yes. And they found a lot of stuff with the inspections too. So it's good to have some sort of safeguard right there.
Yeah, and with an inspection, you can renegotiate the contract and get more money back in your pocket. You're also getting a home that is safe, no other work that's needed. So that alleviates a lot of stress on the buyer. Let me tell you, I've had many buyers who had to fight for a property, and they had to waive the inspection, the financing, and turns out there's things that come up after that. And now with this market, you have that opportunity to negotiate and also to do a full inspection and renegotiate the contract.
Correct, and you get the closing costs paid for, so it's a win-win situation.
Yeah. So Francis, I have a couple investors that are ready to add 2 to 3 more rental properties to their portfolio. Rates are really high right now. They're at about, would say 7% for a rental property. What are my options for my investor to get them their foot in the door to add to the portfolio right now?
So there's a couple of ways that they can expand their real estate portfolio. One is using the BRRRR strategy. This is the strategy that I love and I use the most. And basically they're getting a hard money loan. And with this hard money loan, you're getting it at a higher interest rate, but the nice thing about it is that they're funding your rehab for you, and there's a lower down payment. So instead of being an investor, buying an investment property for 20% down minimum, you're getting this 10 to 15% down, and then they also fund your rehab on top of that. So that extra money, it's all rolled into the loan. Once you do your rehab, you do a refinance cash out, you can pull out your original money. And the nice thing about it is that you didn't put 20% down, and you didn't have to put extra money out of pocket to fund your rehab.
Say I find a house and it needs a lot of work, and I go in and remodel it, I complete the remodel, then I go back to you and refinance, correct? And then pull out the initial funding that I put into the property back out.
Correct. So you would refinance it and then you would get the initial down payment. The thing about the refinance is that you have to have a certain seasoning period for it. So as long as it meets the required seasoning period, then you can pull that money out, and then you can keep on doing this, recycling and repeating this as you go along and expanding your real estate portfolio.
Francis, you mentioned the seasoning period. What does that timeline look like? I know it changes accordingly.
Correct.
What does that look like?
So right now it's 6 months, but there could be changes in the future where they're going to require it to be on average 12-month seasoning.
Francis, I have quite a bit of clients that have many rental properties and they no longer qualify for the traditional financing. What are some of the other options that they can go and purchase another property or refinance on another property?
Yeah, so a lot of investors will have that limitation where their debt to income ratio is too high. So instead of looking at your tax returns, we have a bank statement loan if they are self-employed, where we will look at the 12-month bank statement deposits. So instead of looking at all the expenses and all the write-offs and tax deductions and so forth, we're only looking at the deposits going in, and then we're applying an expense factor based on their business. The other loan that we have is the DSCR loan, which is the debt service coverage ratio. So this one does not even look at the income or job history of the borrower at all. You don't even need to have a job. So for a lot of those
I like that.
Yeah, for those real estate investors who do not have a real job or not a job on paper, we have the DSCR loan where it looks at the cash flow of the property. So as long as it covers the mortgage rents, then you should be good to go.
There's a lot of options out there when you're traveling through your financial journey. Reach out to Francis and myself.
Yep, so you can contact us either by messaging us or giving us a call, and we'll go over your whole entire portfolio and strategize with you to see what are the best steps and what will help you increase your real estate portfolio.